Is the undisputed king of semiconductors about to stumble? One minute they're hitting record market share, the next, well, you hear about corporate espionage. This isn't just about a stock, really. It's a high stakes drama, dominance versus doubt. Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into the chip giant, Taiwan Semiconductor, ticker's TSM. And all our analysis, just so you know, uses data captured September 2, 2025, around 6:58 a.m. Eastern Time. It's all from our research. Okay, let's unpack this because the bigger picture, the macro environment, it's throwing some serious shade right now. The market mood today feels, I don't know, definitely in a minor key. You look at the pre-market futures, they're pointing to a pretty rough open. NASDAQ's already taking a hit, especially tech. And Barclays, they're even using terms like stall speed for the U.S. economy. They're putting the chance of a significant contraction at almost 50% over the next couple of years. Now, this isn't just like abstract economic talk. It creates a real risk-off mood. That's a headwind, even for a giant like TSM.
Exactly. And what's really crucial here for you to grasp is how these bigger economic worries sort of act like a dampener, even on TSM's, individual brilliance.
Yeah.
Because for a company so tied to global tech spending, a stall speed economy, that can mean businesses tighten their belts. Maybe less spending on new AI infrastructure.
Right, which hits TSM's growth engines.
Directly. And it makes those planned price hikes they're talking about maybe a harder sell. It really is this tug of war playing out, their internal strength versus these systemic stresses.
Okay, and here's where TSM's own story gets really interesting, because on one side you have this, jaw-dropping dominance. Our research shows them with a record-breaking 70.2% market share. Global foundry business, that's huge, last quarter. Over $30 billion in revenue, mostly driven by AI chips, that insatiable demand. They're so confident, actually, they're talking about 5-10% price hikes for 2026. So this isn't just a company, it feels like an industry titan at its absolute peak.
But can even that kind of dominance truly insulate them? Especially when you get these tremors from within. What's fascinating here is seeing how the market tries to balance this undeniable strength, fundamentally speaking, with the recent headlines. Employees detained. Alleged trade secret theft for next-gen chips.
Yeah, that popped up. Seems minor maybe, but...
Probably a minor hiccup, in the grand scheme. But it's definitely a distraction. Bit of crack in the armor, you could say. Wall Street, though, still overwhelmingly bullish. You've got 15 out of 16 analysts saying buy or strong buy.
Wow, okay.
But look at the fair value range they're giving. It's incredibly wide, like $124 on the low end, over $300 on the high end. And the stock, trading around $230 right now, just highlights this zone of uncertainty.
So TSM's fundamentals are strong, but there are these maybe vulnerabilities showing. The next question then is, what's the crowd actually betting on? Let's look at the sentiment story. Okay, the options market seems to lean optimistic. We're seeing a bullish put-to-call ratio. It's 0.63. That means, more bets on the stock going up than down. The $125 call strike seems to be a key target there. But on the other side, the bears, they're really quiet. Short interest is incredibly low, 0.49% of the float. Tiny. So sentiment feels hopeful, but maybe not like a super crowded trade either way, which is interesting in itself.
Yeah, and that raises an important question, doesn't it? Why isn't the conviction stronger, given how dominant TSM is? The fact that it's not a heavily crowded trade. You combine that with those really different fair value estimates, it suggests the market isn't fully committed. It feels more like cautious hope, a kind of silent deliberation you should probably pay attention to.
Okay, and this is where the plot thickens even more. When we look at the technical story, zoom out, long-term trend for TSM. Undeniably positive, looks great, but zoom in on the short-term picture. We're seeing, serious signs of fatigue. It suggests a potential reversal might be coming. Think of it like a marathon runner, maybe hitting a wall. Still going, but the pace is slowing, dramatically. Volume adds another layer here. It's kind of a split story. You see heavier selling volume on down days that suggests money flowing out. But accumulation metrics, the ones tracking big institutional players, they suggest the bigger players might be, quietly buying on the dips.
Accumulation distribution line.
Exactly. So it's like a real battle happening under the surface. Momentum, too, is clearly fading. That upward acceleration, it's stalled. It's actually pointing downwards now. Weakened buying power.
Right.
And volatility, it's tightening up. The stock's trading in a narrower range lately. It suggests the stock is sort of coiling like a spring, right? Building energy for a big move one way or the other.
You're absolutely right. And when you try to synthesize all those conflicting signals, it's a fascinating paradox. That technicals are hinting at maybe a temporary pause or even a potential pullback. despite that long-term strength. And this isn't just random noise. It feels like the market itself reflecting that broader uncertainty, that indecision we talked about. The smart money might be accumulating, yeah, but the overall market sentiment seems to be just holding its breath.
So, putting it all together, the nervous macro picture, TSM's fortress-like fundamentals but with those cracks, and these weakening short-term technicals. For today's playbook, our call is pretty clear. A wait-and-see approach. Why? Because you've got this world-class company facing a really risk-off market. You've got a fantastic long-term story versus weak short-term price action, fading momentum, and honestly, what looks like a nasty down day setting up. Trying to be strongly bullish or bearish right here, right now, it feels like a low probability bet. So here's your game plan. Keep a close eye on the $230 level. That was a previous low, and it's roughly where the stock is hovering in the pre-market. If sellers break below that and do it with conviction, that could open the door down to $216 pretty quickly. On the upside, if it can reclaim the $233 level, that's the pre-market high we saw, that might signal that this short-term weakness was just, temporary noise. These levels aren't just random numbers. They'll give you clues about whether the macro fears or the fundamental strength is winning out today.
Precisely. Those specific price points become your key confirmation signals. How the market acts around $230 and $233 will tell you a lot about whether it's the underlying fear or that fundamental resilience that's really going to dictate TSM's next big move. It's about letting the market, show its hand rather than just trying to guess.
So TSM, a titan, a colossus, but it's navigating some shaky ground with these macro fears. It's a powerful reminder, isn't it? Even the biggest ships have to respect the weather. Our advice: don't fight the tape if it's moving down, but also probably don't bet against the king without clear confirmation either way. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.